How would you like to build wealth without needing to spend hours researching stocks? If that sounds great, then ETFs might be right for you. ETFs, also known as exchange traded funds, are one of the simplest and most effective ways for people to invest, and especially for beginners. Over the next few minutes, I'll teach you what ETFs are, how they work, and also why they might belong in your investment portfolio. So what even is an ETF? An ETF is a group of investments like stocks or bonds that you can buy and sell on the stock market just like you would a regular stock. It can help to think of ETFs like grocery carts or baskets that someone else has already done all the work to fill up, and you can just buy that instead of going and finding, buying, and managing the investments yourself. As long as the cart already has all the right stuff in it, you can save yourself a lot of work by just buying that instead. And there's practically endless ETFs to choose from, whether you want to invest in something like the S&P 500, real estate, AI, or even commodities such as gold. As for how ETFs work, their price on the stock market changes based on the fluctuating prices of the sub-investments that they include. ETFs also tend to be very diverse, giving you access to even hundreds or thousands of companies or sub-investments, and that's great because it spreads out your risk. Another great aspect of ETFs is that their expense ratio tends to be lower, especially compared to their competitor mutual funds. And that's great because it means less of your money is going towards managing the investments and more of it is actually going towards investing in them. The fact that ETFs are relatively simple, that they are highly diversified, spreading out your risk, that they are generally highly liquid, allowing you to buy and sell them often, and that they have low expense ratios makes them a great investment for most beginners. It takes away the skill and luck of needing to be a stock picking genius. You can just choose something that tracks the market, like VOO that tracks the S&P 500, and that will grow effectively over time. Lastly, it's important to know the types of ETFs that are out there so that you can invest in the right ones. There are index ETFs that track a specific index, such as the S&P 500, or there are also sector ETFs, bond ETFs, commodity ETFs, thematic ETFs, and many more. To recap, ETFs, or exchange-traded funds, are basically just groups of investments that are sold like an individual stock is on the stock market, and they're generally great for most investors and beginning investors especially because they're relatively simple, they have low expense ratios, and they're highly diversified, spreading out your risk. If you found this lesson useful, I would really appreciate it if you invest in that like button, consider subscribing to the channel, and check out these videos for more.